Good morning. It's Harvey Jackson. Just going to go through wheat and canola fundamentals, just the world position using USDA and a little bit of the StatsCan, but mostly the USDA and how they see it as we've got a report coming out tomorrow. So, the Canadian wheat exports. So we're starting off with wheat, and what I want to maybe point out is who's the major wheat exporters, and we're currently positioned in number three position, and Russia's crop is getting smaller and European Union's crop is getting smaller. Canada's holding, and Australia is still in a bit of a mix with weather coming at them. USDA grew a good crop. Ukraine, mediocre as well. But who's the major players, and if the top two above us are maybe a little bit short, that could actually have an impact. So what is this number going to be? Is always the question here on the export side. So global wheat ending stocks, and this is a pretty drastic picture when you it's probably just emphasized even worse. But you're like we're going back into 2015 since we've seen these kind of levels. So USDA will report another number. Whether that's going to change a whole lot, they shifted it up the last time, but this is basically saying that we've got a downward sloping wheat ending stocks picture. Now, couple that with a couple of the major exporters growing less, it's actually going to potentially have some upside for us as well as time goes on. So the Canadian wheat from my from the StatsCan number. So this is kind of the number if we get normalized kind of exports and some production. And I have this number here on the what if, just a slightly higher bushel production number. So let's look at the canola now, and just looking at it with a similar kind of lens. What is the canola production? We are the number one producer with a shrinking crop. European Union, second producer with a shrinking crop. Now, is there going to be estimate changes on that as well? But we'll see. But you can see the same kind of trend line that we saw on the on wheat with some possible shrinking numbers as well. So so when we look at ending stocks, Canada and our numbers maybe a little bit bigger than that on the actual S&D, but you have these couple countries with decreasing ending stocks. So this number is likely to get pushed down a little wee bit as well. So canola production, here's from StatsCan. That's about their number for the current export pace and everything. This is with a lower estimate of production in Western Canada, and it does create a tighter ending stocks. Took this from Karen Braun. It's just interesting to me, just understanding U.S. imports of canola slash rapeseed oil, and it's noted in here that there's a 17% increase year over year, and you can see that right there that we're starting to already get an increase in them buying the product, which is bodes well for our crush capacity increasing and the hunger for that product to be able to go into that renewable slash biodiesel feedstocks. So with information that just came out later yesterday, and I just want to highlight a couple of these areas here that we're looking for improvement in basis levels, and the only caveat I would put out here for the Manitoba, Eastern Saskatchewan kind of growers, we're still looking for a 25 to 30 cent higher price from yesterday's close, but looking more on the May if possible, because the March futures is not a delivery month for us per se, but we're looking for approximately 30 cents higher futures. So let's call it $7, $7.10 May futures first targets to put in, and then we'll be locking in basis later. And then we're also looking for the 7.25 futures first for December 25 for the upcoming crop year for the next year's production. So and depending on the grower, we might be targeting Oct to Nov kind of delivery period just for some of the basis improvements post harvest. Core CPI is out today, and the producer price index is out tomorrow, and that's probably very likely going to give us a bit of a slant of what the Fed hikes could be for the U.S. and that's actually impacting the Canadian dollar more than you would like or you would understand. So just quick going through what the weather, significant weather. Here it is, Hurricane Milton going to be making landfall if it hasn't already, and there's some significant weather to be paying attention there. And then, with some of the other storms just passing through the country, we'll have some storm surge warnings, and that's the major one. And you can see, the bullseye is already starting to get closer to the country there, of course. So what I want to point out here in this map is, and again, 10-day forecast is starting to show some significant weather in there. There's a little bit of weather actually hitting southeastern Australia, and of course this Milton coming in here as well. Yeah. So Australia, this is just a GFS 1 week forecast, kind of an idea. It's starting to hit that area there. When we're looking at Ukraine, it looks like we're starting to get some weather or rain in there, and which is badly needed as far as dryness concerns. It still looks like there's some void areas out there in the Russian area that is not getting the rains, of course. And here's your major growing area of South America. And there's been some articles even that got posted yesterday. They're talking about this area being deficient in moisture, and it's going to take away some of that expected wheat production in Argentina. So here's your oilseed and your snapshot. Canola, flat, rapeseed up, and soybean oil and palm oil down slightly. What I can say is we're getting some support from our Canadian dollar to support the canola, and we've got wheats up and crude oil up a little bit as well. So we'll start off with canola. I shifted my trend line here, but we need to trade and stay above this, and I think there's a good chance we could. Yesterday I talked about wave analysis getting to the 50% of the move, and that's right there, and it looks like we're going to potentially bounce off of that. I did do the inverted retracement as well, and it's not a coincidence that there's a support line or a resistance line to go through to hopefully hold that market going up as well. So the significant number that we need to get through is that 200-day moving average and get above it, which we're a little ways away. So November 25, looking for some targets in this area to get started with a percentage. Probably try to get into a little higher levels once we get through those ones as well. But we've pulled back in the last few days, and expecting to try to put some targets in, put it in this range right here, 655 to get a little bit of it started to get some sales in there. Your European rapeseed following trend line did not break, now above the 61.8 and holding. Rapeseed priced in Canadian dollars, and it is $123. So we've got this leg going back up. Rapeseed hasn't pulled back like the canola had. Your palm oil had some pullbacks, but still above the trend line and above the short-term moving average here as well, the 10-day moving average. Your soy oil, on the other hand, had some failures, and it actually broke the wave analysis and trading below it. So we'll have to see if the StatsCan can give us any, or not the StatsCan, the USDA can give us any positive news there. So crude oil, a little bit of a recovery today, bounced off the 50% on the wave analysis. Soybeans still having a lot of trouble here, trading at the 23.6 retracement value. Canadian dollar, this has been quite a slide, or at least feels like quite a slide from its highs that we've been in, and it's breaking through some of the shorter term moving averages and still continuing to go down. Whether we retrace all the way back down to here, anybody's guess, but depends on what the USD comes up with, their CPI, and then the expectations of what they're going to do with their interest rate hikes. Just a longer term look, so that's where we are relative to the kind of range that we've been trading. So we've got a little bit of a differential we can move into. Wheat is maybe the more positive story, and when we look at the chart, it doesn't look as positive as like. We need to get above this previous high made back in June, July, and above this 38.2 retracement value. We are currently above the 200-day moving average, or 100-day moving average, sorry, and but it will. Yeah, it's a little bit more positive. You can see that there's a bit of a lag here. We're in this channel. So if we look at wheat for new crop, and Kyle has put out some recommendations to get into that range right there, somewhere in the middle of this retracement value. I'm okay just getting a little bit started at any point in time here, just have a target in mind, and let's just put it in there to get some of those sales. So the only companies out there that's actually entertaining it right now, and I've got some orders in, is with Cargill at this point, and I've reached out to a couple of the other ones that do futures first as well, and they're working on it. If hopefully we can get something in place. Here's your Chicago wheat, nice uptrend, still has to get above that 38.2 retracement value. And here's your hardwood red winter, above your 100-day moving average, but still not above the 38.2. So we'll see if the USDA report will give us any bullish sentiment on wheat. Here, the France wheat is above the 100-day moving average and above the 38.2. So if we're looking for any indication what others can actually do to support us, maybe it's Europe that we're looking for some to add to get this lift. Corn, still in this trend, and it's failing the 200-day or the 100-day moving average, and you can see it's like it's a downward slope of how that market is trading at the moment. Tomorrow is the report, and we'll see if I can do something more around that report and maybe invite a guest or something, and we can have maybe a little bit more interaction. We'll chat with you later. Take care.